Hello, everyone, and welcome to Helping Clients Set Up Their Remote Employees. This webcast is brought to you by CPA Practice Advisor and CorpNet. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor, and I'll be your moderator today. Before we get started, let me explain how CPE for this webcast works. The webcast qualifies for 1 credit of continuing professional education. If you plan to earn credit for attending this session, you must stay with us for at least 50 minutes. In addition, we will display 4 polling questions during the webcast, and you'll need to record an answer for at least 3 of these questions, as this is our verification that you are still watching. Later today, you'll receive an email from CPA Practice Advisor that contains a link to your CPE certificate, assuming you met the requirements for CPE. Please note that we can give continuing education credit for multiple people watching on the same computer. So if there are others in your office who would like to attend this event at the same computer, please have them join you now. And at the end of the event, we'll provide an opportunity for you to send us their names and email addresses so they too can receive credit. At any time, you can enter questions that you might have in the Ask a Question box provided on your screen. Our speaker will try to get to as many questions as possible during the presentation, but any questions not answered during this live webinar will be addressed by the speaker afterwards via email. The slides and resources for this event are available for download by clicking the event resources at the bottom of your screen and then clicking on the PDF file that's displayed. Also, Also note that the archived version of this presentation will appear on the CPA Practice Advisor website after the event ends. CPE credit won't be available for watching the archived version, but you'll be able to watch it and share it with other people that might be interested in this topic. Today we are joined by Nellie Akalp, founder and CEO of CorpNet. And now, Nellie, we're ready to begin.
Thank you so much. Hi, everyone. My name is Nellie Akalp, founder and CEO of CorpNet.com, and today I'm going to be presenting on how you can help your clients set up their remote employees. So we have a lot of material to cover here, so I'm just going to get right to it. Again, thank you, Gail, for the wonderful presentation. A little bit about myself. I'm founder and CEO of CorpNet. CorpNet is an online legal document filing service, and our mission is to provide the most comprehensive, cost-effective services when it comes to helping you and your clients with any aspect of the business, startup, compliance, regulatory, and management process. We offer our services nationwide, and our services range anywhere from starting a business, managing a business, keeping it compliant, payroll and tax setup accounts, setting up payroll tax accounts, setting up sales and use tax accounts, and we offer the services in all 50 states. I've been in this space since 1997. I'm a graduate of, I'm a law school graduate. I graduated in 1997, and I decided to not really follow the legal career, and I wanted to become my own boss. So I decided to become a serial entrepreneur, and I've been in the legal document filing space, tech space, ever since 1997 with my husband, Phil. As a result, I've helped hundreds of thousands, over 500,000 small businesses and licensed professionals like yourself, not only get started, but also help their clients get started and maintain, compliance and companies across the United States. You can look me up. I'm all over the internet. I write a lot on different types of publications, including Accounting Today, Forbes, Entrepreneur, and many, many other publications. And as a result, I've really become an influencer in the small business community and a prominent influential expert. So without any further ado, if you're interested to follow along and check out the website, it's at www.corpnet.com. You can follow along, and let's get rolling. So today's agenda. As you know, many businesses have team members across state lines, and on the cusp of our national disaster and COVID that happened about 5 years ago, a lot of companies decided to go remote. And I look at it as the silver lining. And you may have clients with remote employees in other states as well. So payroll can get really confusing when it comes to paying those employees and tricky in those situations. So in this webinar, I want to go over some considerations employers should think about when understanding payroll requirements for remote workers and what you should be equipped to know so that you can guide your clients properly. So in this webinar, we're going to review considerations when hiring remote employees out of state, payroll setup for businesses with remote teams, and also steps to take everyone get set up properly. Now, what are some of those considerations when you're hiring a remote employee out of state? Well, typical employment-related taxes for remote employees are as follows. Here's the bottom line. Essentially, employers must withhold and or pay the same types of taxes for out-of-state employees as they do for their in-state employees. And these are, as we know, federal income tax, the FICA, which consists of the Social Security and Medicare tax, the FUTA, which is the federal unemployment tax, or also, it's called the SUI tax, the state income tax, the SUI tax, aka the SUTA, the state unemployment insurance, and also local income tax. Now, what happens is when an employee doesn't live in the same state as their employer, the payroll taxes of that jurisdiction where the employee lives and works basically take precedence and apply. So if an employer has a remote employee across state lines, it must register to report and pay payroll taxes in the employee's state. For example, if ABC Flooring Solutions in Alabama hires a remote employee in Georgia, the company, ABC Flooring Solutions, has to register for payroll taxes in the state of Georgia. Keep in mind that in addition to state employment taxes, some local governments may have payroll tax laws as well on the local county level. Now, we need to talk about with payroll and when a company needs to, when a company has a remote employee in another state other than their home state, another issue comes up, which is as they are trying to register their remote employees to get a paycheck on payroll in that other state, the other issue is, does that company have nexus where there may be a potential requirement for them to foreign qualify the actual business to have the authority to conduct business in those other states that it has employees within where it's registering for payroll taxes. So besides registering for payroll taxes, an employer might also have to file for foreign qualification in the state where a remote employee lives and works. So if they, for example, a company is a corporation or an LLC and they're hiring remote employees in state B and their home state is in state A, they may need to also foreign qualify in state B. Now, foreign qualification means the company is going to be registered as a foreign entity in a state beyond its home state, its domiciled state, where it's filed its original formation documents, where it originally formed its corporation or LLC. Now, the requirement to foreign qualify depends on whether that employer has nexus, i.e., an economic or physical presence in the employee's estate. If a company has nexus and must foreign qualify, it must then comply with the business compliance requirements in their initial state and also all of those foreign states that they're foreign qualifying in. And again, this is these are all the services that a company like ours can offer and help you as a financial professional not only do it for yourself, but also offer it to your clients. Now, here's some examples. Obtaining and renewing licenses and permits filing annual reports, paying state income tax and sales tax. These are all of the requirements that we're talking about, where we're talking about business compliance requirements that company that not only is domiciled in its home state, but also in any foreign states has to comply with. Now, let's talk about what is it that we need to know in determining if an employer has nexus in other states? Well, economic nexus may occur when a company generates revenue in a state, which can occur even if no physical office or employees exist. So that's one type of nexus, is economic nexus. Now, keep in mind, states' rules varies for what constitutes economic nexus, but generally, these two methods determine whether it exists. One is cost of performance sourcing, and the second is market-based sourcing, okay? Now, also, keep in mind, many states have thresholds set for when economic nexus is established. Some determine a company has nexus upon reaching revenues that exist a specific dollar amount or a specific number of sales transactions. Now, keep in mind, physical nexus means that, for example, physical nexus can mean an employee was hired in a state to generate revenue, or the employer has an office, warehouse, or state, or a store in that state. Nexus rules, keep in mind, vary from state to state. So it's really important that businesses research and understand and comply with the laws in any state where they've hired remote employees. And what I'm going to do as a favor for all of you is, if we can post the Nexus guide, I think it would be very beneficial, because we have a guide for Nexus in all 50 states. It's a 50-state guide for Nexus, and we will go ahead and get this posted for you in the chat box, so you can always refer to it if you have any questions on this, because it can get really tricky. Now, what are the requirements for employers that don't have a state-registered business? Well, sole proprietorships and general partnerships can hire remote employees in any other state. Just like LLCs and corporations and other entities, they must complete payroll registration in any state where they're going to have remote employees. However, here's the key point, is that they do not have to foreign qualify, even if they meet a state's income, the state's nexus criteria. Why? Because they're a sole proprietorship. There is no business entity. It's not a legal entity separate and apart from the business owner. For those of you who want to know more about the different types of business structures, we have presented webinars on different business structures, and you can look at it in our archive, or come to the website at www.corpnet.com and you'll see all of my webinars, and there's plethora of information on the different types of business structures. So keep in mind, that's the key difference, in that if it's a sole prop or a general prop and they want to have employees in other states, they don't have to foreign qualify. Sole proprietors and general partnerships are considered individuals, not legal business entities. So no foreign qualification requirements exist to expand them into other states. While this state, while it could seem ideal in some ways, it does come with a lot of risks. One big one being that there is no liability protection. God forbid you end up on the wrong side of a legal battle, or asset protection. Now, keep in mind, opportunities lead to added complexity. What are we talking about here? So employers must register for payroll in the states where their remote employees work. Depending on the state where your client's businesses is domiciled, payroll taxes in a remote employee state might be more or less than what they pay in their home state. If your business client has, for example, nexus in and must foreign qualify their business in the employee's estate, they will bear the cost of foreign qualification, filing fees, plus other fees, including business license application fees and compliance fees. Now, we are in time for our first polling question. Gail, back to you.
All right, thanks, Nellie. Our first question is, In general, which two methods determine whether economic nexus exists in a state? And the options are destination-based sourcing and origin-based sourcing, destination-based sourcing and cost of performance sourcing and market-based sourcing, or market-based sourcing and destination-based sourcing. So pick the one you think is correct, and then click the submit button. If you have any trouble answering the question online, you can answer it in the ask a question box and just post your answer there and we'll record it at that point. Also, I just want to mention that the 50 State Nexus Guide that Nellie mentioned is available on your screen in the Events Resources section down where you'll also find the PDF of the slides for this event. So you can download both those things there. All right, Nellie, back to you.
Thank you so much. So let's talk about payroll setup for businesses with remote teams and what's really involved. So here's a general overview. In the US, tracking, reporting, and paying payroll taxes are required legally by law to hire and pay employees. Some taxes must be withheld from the employees' paychecks, and the employer must pay some as well. Businesses must register for the appropriate payroll tax accounts at the state and federal levels, and sometimes local level if there is a local withholding tax within that state to process employee payroll and file returns. Now, keep in mind the rules and requirements vary from state to state, which I keep saying it, but generally payroll taxes might include federal income tax, state income tax, local income tax, FUTA, which is basically a combination of Social Security and, FUTA is the federal unemployment tax, SUI tax, which is the state unemployment insurance tax, Social Security tax, and Medicare tax, which is a combination of the FICA. So with that said, we've gone ahead and put up a little table here for you that gives you a description of each of the different taxes and also the different government body that's requiring this tax, and also who this tax is being paid by. Is it paid by the employee or the employer or both? So as you can see, for example, the FICA tax, which is a combination of the Social Security and Medicare tax, called FICA, federal, which stands for the Federal Insurance Contributions Act, are shared between the employees and employers. It's a federal tax and it's shared by both the employer and the employee. Whereas, for example, the additional Medicare tax is something that's only paid by the employee. The unemployment insurance tax is a state tax that's normally just paid strictly by the employer. So take a look at this tab. As we've presented it to you, you can always reach back out to it and familiarize yourself with it. Let's talk about the state payroll tax account. So when somebody goes to basically want to process payroll for an employee in any state, they have to have their state payroll tax accounts set up, okay? So what are these state payroll tax accounts? Again, if any employer in any state wants to pay any of their employees through payroll, before they can pay them through payroll, they have to have these state payroll tax accounts set up. And these state payroll tax accounts consist of the state income tax, also referred to as the SIT, and the state unemployment insurance tax, which is the SUI tax. Now, again, this is a service that our company provides in helping financial professionals, accountants, CPAs, anybody representing a client. We can assist in setting up all of the state payroll tax accounts in any of the states that employer is needing to be set up. And also, if that employer, in addition to needing these state payroll tax accounts set up, if they're going to be needing foreign qualification within those states, again, these are all the services that a company like ours can assist you with. And we have a program that I will be talking about at the end of this webinar. Now, let's talk about what these taxes are. The state income tax is a required tax applied to an employee's wages. Small business owners are responsible for deducting SIT from an employee's gross wages and submitting this tax to the state's tax agency. Now, keep in mind, all states require the SIT withholding tax except for the following states: Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. Now, that's your state income tax, one of the tax accounts. The other tax account that needs to be set up is state unemployment insurance, which is the SUI tax. What is that? Well, if you hire employees, you are required to pay the SUI tax on their wages. This is a state tax that's imposed by the state. The SUI program offers short-term unemployment benefits to eligible workers who are unemployed because they have lost or left their jobs. SUI eligibility and benefits are determined by that individual's state's laws. Now, employer taxes associated with SUI, again, the SUI tax and the SUI rates, again, vary from state to state. So again, we've gone ahead and summarized it here for you. Here are all the different states, and we've summarized all 50 states for you here as to what type of tax account they need to, that you need to set up within this state if you're planning on paying the employees through payroll. And then how do you pay these taxes and the percentage rate? So again, these all this webinar slides are available for download at the end of this webinar. And again, as you can see, we've summarized it for you in all 50 states. Now, we are in time for our second polling question. Gail, back to you.
Okay, thanks, Nellie. Question number 2, which type of tax provides payments of unemployment compensation to workers who have lost their jobs? And the options are the FUTA tax, unemployment insurance tax, disability tax, or workers' compensation tax. So pick the answer that you feel is most likely correct and click submit. And again, if you have any trouble answering this online, you can post your answer in the ask a question box on your screen. Meanwhile, I'm told that the 50 state Nexus guide is not down in the resources on your screen. We are looking for it, and we'll get it to you by the end of the webinar. So stay tuned for that. Okay, back to you, Nellie.
Thank you so much, Gail. So let's talk about, well, now that, we've gone over how to set up your, remote employees and the considerations that come along with it, and I've gone over the requirements, let's talk about the steps to get you started so you can have all this information under your belt when a client comes in and needs your assistance in setting up payroll for their remote employees. So first, we got to determine if your clients need to foreign qualify. So here's some examples for you. If a Michigan company is, for example, doing business in Illinois and has physical presence in the state of Illinois, it is operating as a foreign LLC in that other state. This company comes up when, this commonly comes up when LLCs are formed in states with business-friendly tax laws, but do business in their home state, and may also occur when a business starts expanding into other states. So, if this Michigan company, for example, is doing business in Illinois and it also has physical presence in the state of Illinois, then a foreign LLC is going to be required to register with the Secretary of State in that foreign state, albeit being the state of Illinois. Now, the LLC certificate and other documents issued by the home state will be needed, and the home state, i.e., in this example, Michigan, needs to show to Illinois that the Michigan company is in good standing before Illinois can register and approve the filing of the certificate of authority, which is the foreign qualification within the state of Illinois. So when someone needs to foreign qualify in any other state than their home state, one, they need to make sure that their corporation or LLC in their home state is in compliance with all of their filing requirements and their compliance requirements within their home state. They've paid all of their, franchise taxes, whatever the state requires them to pay, they're all up to date. And then if they are, they need to get what is called a certificate of good standing from their home state. Have that in hand, because that is one of the documents that is required to be submitted along with the foreign qualification documents to the state that they're planning to register in as a foreign corporation or LLC. And we can go deeper into this. So what qualifies as doing business? Well, when reviewing the need to foreign qualify any corporation or LLC in any other state, you have to look closely at your business activities for that corporation or LLC. The exact definition of doing business, again, varies, from state to state, but typically, we've gone ahead and simplified it for you, and it equates to the following. One, the business has physical presence, an office, a warehouse, or a retail store in that state, some sort of a storefront. Secondly, the business conducts in-person meetings with clients or customers within that new state. Third, the business is structured as an LLC corporation or a limited partnership or some other sort of a legal entity, such as a professional corporation, a professional LLC, a nonprofit corporation. It has to be a legal entity. It cannot be a sole proprietorship or partnership. Also, the business has employees living or working within that state, or you've reached a sales threshold within that state. Now, you don't have to meet all of these criteria, but any one of these criteria can constitute nexus, which means you're qualified in doing business within those other states, which constitutes nexus and hence requires you to foreign qualify that corporation or LLC for yourself or your clients. Now, let's talk about what doesn't qualify as doing business, okay? In most states, the following business activities do not constitute transacting business in a state or otherwise do not constitute nexus for a corporation or an LLC. One is defending or settling a lawsuit. So if a corporation is domiciled in California and they're defending or settling a lawsuit in Nevada, that does not constitute doing business. Dealing with internal LLC or corporate business, such as member meetings, having a bank account in that state, selling through independent contractors, securing or collecting debts, or conducting an isolated transaction that is completed within 180 days and not repeated. So one or more of these criteria, if that particular business is doing one or more of these do not constitute or qualify as doing business and hence does not constitute nexus. We are in time for our third polling question. Gail, back to you.
All right, everyone, this is polling question number 3. Which of the below does not qualify as transacting business in another state? And your options are: the business conducts in-person meetings in the state, the business has employees living and or working in the state, a sales threshold has been reached in the state, or you have a bank account in the state. So choose the one that you think is most appropriately not the one that qualifies as transacting business in another state, and then click the submit button. And I have an update on the 50-state Nexus Guide, which is now available in your resources. You'll have to refresh your screen in order to pull that down. Refreshing your screen won't mean you have to re-register. You just refresh and we'll be right here when you come right back. And the Nexus Guide is now in the resources section of your screen. All right, back to you, Nellie.
All right. So we've gone ahead with the steps to get started, which really, before we actually follow the steps of foreign qualifying a business, we need to first decide if that particular corporation or LLC has nexus or meets one of the criteria of what qualifies as doing business. If they do, then foreign qualification within that state is required as a precursor or simultaneously when the payroll accounts are being set up, okay? So how do you foreign qualify? Well, first and foremost, as I mentioned, before you can foreign qualify in any other state, you have to obtain a certificate of authority from the home state. So corporation is in California, now they want to do business in Illinois. California corporation has to be in good standing, and California corporation has to provide a certificate of authority saying that California corporation is in good standing. And that certificate of authority basically, let's step back here. I am so sorry, guys. Obtain a certificate of authority. So this is basically what we're talking about. I thought it's certificate of good standing. So let's back up. When somebody needs to foreign qualify, okay, you need to obtain a certificate of authority. What is this? It's basically, you got to foreign qualify within the state that you're planning on doing business in. Most states have similar procedures to file a foreign qualification, and it starts at the Secretary of State's office in the state you want to register. I'm just way above myself and I'm going fast. So the certificate of authority is actually the foreign qualification. And in order to file a foreign qualification in any state that you plan on doing business in and foreign qualify, you need to submit documents to the Secretary of State along with a state fee or a filing fee. Along with the certificate of authority form and the filing fee, you also need to obtain a certificate of good standing from your home state. And this is where we come to number 2. So how do you obtain a certificate of good standing, and what is a certificate of good standing? So the client might also have to show the business is in good standing in its home state, which may require official documentation. Keep in mind right now, most states will require a certificate of good standing for the state you're planning on foreign qualifying within. So a certificate of good standing is used to ensure that the corporation or LLC has kept up with their responsibilities within the state that's their home state, and they've kept up with state and specific tax board requirements, and that specific entity in its home state is current and in good standing within its home state. If the designated company is not in good standing in its home state at the time of when that corporation or LLC wants to basically foreign qualify, the Secretary of State within that foreign qualifying state will require that company to basically reinstate good standing status before they can issue a certificate of good standing to that designated company and allow them to conduct business in that foreign state. And again, I apologize to all of you for getting ahead of myself. So how do you go about this? Well, you got to also perform a name search, okay? So really, I'm going to do it in real life for you. Company is in California. They want to foreign qualify in the state of Nevada, okay? First thing you got to do, okay, is determine if that business has enough nexus that qualifies as doing business within Nevada. Once you determine that, you're going to say, okay, well, I need to foreign qualify. So in real life, you would be doing, gathering that state's requirements for foreign qualification, obtaining the certificate of good standing from the home state, i.e. California, and you got to also perform a name search to make sure that the name of the corporation or LLC that you're using within the state of California is also available, in our example, in this case, in the state of Nevada. So you're going to need to do a name search in each state to make sure the business name is legally available. If the desired name is not available, you can do a variation of that name, or you'll need to use a fictitious business name, AKA doing business as, or a DBA in that foreign qualification state. Now, keep in mind, when you're using a DBA, it's really because that company doesn't want to do any variation of its legal name, and they want to stick to the exact name that that company has in its home state. So a DBA name is a name that's different from the legal name of the company. It is a name the business wants to use when marketing itself to the public and dealing with customers, and they really don't want to stick with the legal name of the company. So corporations and LLCs who want to conduct their business under a variety of different business names, but want to still keep it under the corporation of under the umbrella of that corporation or LLC, often have that corporation or LLC file what is called a fictitious business name, also referred to as a doing business as filing. Now, any of these services that I'm talking about here, CorpNet can help you with, assist you with, and provide as a service. Now, keep in mind, specific requirements for filing a DBA, again, vary from state to state and also county to county, because in some states, DBA filings are required to be filed at the county level, whereas in other states, they're filed with the Secretary of State's office. You also, when foreign qualifying into a new state, you need to have a registered agent. You need to assign or designate a registered agent. So let's go back to our example. California Corporation has nexus in the state of Nevada. It's a corporation in the state of California, has a registered agent in the state of California, but now needs to foreign qualify in the state of Nevada because they're doing business in Nevada by hiring remote employees. Well, guess what? One, it's determined they need to foreign qualify. And if they need to foreign qualify, they need to perform a name search, they need to obtain the certificate of good standing, and they need to assign and designate a registered agent that will act on behalf of that corporation or LLC in the state of Nevada. They can't use the same registered agent that they're using in California. Why? Because the registered agent has to be a person or a commercial agent, like our company, CorpNet, that can be in the state where that corporation or LLC is planning on doing business in. So what is a registered agent? Okay, a registered agent is also known as a statutory agent or resident agent. A registered agent is basically a person or a company with authority to accept service of process, legal documents, government notices on behalf of that corporation or LLC that's planning on doing business within that new state, AKA in our example, in the state of Nevada. So this registered agent within our example has to have a Nevada physical address, has to be a person over the age of majority, and or a commercial agent or company with authority to accept service of process. And they have to have a physical location in the state where that corporation or LLC is planning on doing business or planning on foreign qualifying. One of the requirements of setting up a corporation or LLC, whether in a home state or if that corporation or LLC is planning on doing business in a foreign state, is to designate and assign a registered agent. And that registered agent has to be a person over the age of majority with a physical address and must be present at that address between normal business hours, Monday through Fridays. So a registered agent, again, in designating one, you have to make sure they're available Monday through Fridays during normal business hours, and the location has to be specified on the articles in order for the Secretary of State to accept and approve that registered agent as a designated agent for that corporation or LLC, either in the home state or qualification state. You cannot have private mailboxes, a mail forwarding address, or a PMB. It has to be a physical address location. Now, I'm always asked, Nellie, can we use our home address as the registered agent address? Absolutely you can, but here's the risk you run. Your information all becomes of public record. So it's always, I always implore my clients to use a commercial agent such as our company, CorpNet. We offer it in all 50 states. The address never changes, and we accept service on process on behalf of you and your clients, and we upload it to you in real time. So really, really great service and something to think about. Now, what are the risks of not filing for a foreign qualification? Okay, so here you are, you have a remote employee and you're doing business, or what constitutes nexus or doing business as, in any other state other than your home state, and you don't foreign qualify. So what are the risks of not filing for foreign qualification? Well, failing to foreign qualify when it's required can cause significant issues for a client's business or your business, including being penalized for operating illegally in the states where that business is conducted. Some of these penalties include fines and interest for the time the company was conducting business in the state and was not foreign qualified, payment for missing filing fees the company should have paid, payment of back taxes for the time the company was doing business without being foreign qualified, and also ineligibility to sue in that state because you don't have standing to sue in that state. So why you have ineligibility to sue? Because an entity can't bring a lawsuit. They don't have standing to bring a lawsuit in a state where they're not properly registered. Now, let's talk about home state versus out of state payroll tax requirements, okay? So let's say you have employees living in different states from where the business is located, all the more possible with so many remote workers getting hired. Well, what do you do then, right? As an employer, you have to withhold and deposit federal taxes and withhold state income taxes in the state where the employee lives. Employing workers in other states requires your business to register with the state's tax agency and setting up the proper payroll tax accounts so that you can properly withhold those accounts, whether it's being paid by both the employer and employee, the employer only, or the employee. You must also register with the state's Department of Labor and follow the state's laws for employees, including minimum wage, labor regulations, state disability insurance, and workers' compensation rules. Now, what are reciprocal states? So this question comes up a lot, is when you have reciprocity between states, does it allow for a company, for example, not to foreign qualify? So reciprocal agreements between states allow employees that work in one state but live in another to only pay income tax to their state of residency. So what reciprocity is when there is an agreement between two states, and with respect to either with respect to an employee living within one of those states, and they're living in one state and they're doing business in one state and living in another, but they get to only pay income taxes to their state that they're living in. But in order for this to apply, there has to be a reciprocal agreement between those states that allow this. So if reciprocity exists between those two states, employees will need to complete and deliver a non-residency certificate to the employer in order to have residency tax, state tax withheld instead of the work state tax, okay? While reciprocity is determined by an employee's home address and pertains to their income tax withheld, unemployment liability is typically determined by where the actual employee's work address is. So keep that in mind. The two are very, very different. Now, we've gone ahead and summarized a list of states that offer basically the state and the list of states that it has reciprocity with and the filing form associated with each. So as you can see, it's just a handful of states. For example, as you can see, Arizona, the state of Arizona has reciprocity with California, Indiana, Oregon, and Virginia, whereas Iowa only has reciprocity with the state of Illinois. Now, how do you set up a formal payroll process? First and foremost, you have to have an EIN number. What is an EIN? It's basically the employer tax identification number, also a 95 number or a federal tax ID number. Generally speaking, this should also already be set up if the business is a corporation or an LLC, because the corporation or LLC, when it's set up, the first thing they got to do is get a tax ID number, because the tax ID number is the social security number for that corporation or LLC. And it's the only way that that corporation or LLC can open up a business bank account. So part of a formal payroll process setup is making sure you have that employer tax identification number, registering with the EFTPS, obtaining local or state business ID if required, collecting your employees' information, typically done with the details they're providing on a Form I-9 and a W-4, classifying your employees into whether they're actual and independent contractor or an employee, and whether they're exempt or non-exempt employees, choosing a pay period. Most companies do, for example, 5th and the 20th, or bi-weekly, or every Friday. So choosing a pay period is really important. And then manually calculating your tax requirements per employee, or picking a payroll provider to process the payroll for your business, such as someone like Gusto or Paychex or Intuit Small Business Payroll. So lots of different payroll companies out there that can help you with payroll processing. We are in time for our fourth polling question. Gail, back to you.
Okay, this is our fourth and last polling question for this event. The question is, all of the below are steps to set up a formal payroll process, except which one? And the answer options are register for EFTPS, designate a registered agent, choose a pay period, or manually calculate tax requirements. So choose the one that you think is correct and click submit. And I do have a follow-up on the 50-state Nexus guide, which besides being in your resources at the bottom of the screen, if you have clicked the refresh button, we're also going to send you a link to that later today when we send you information about your CPE certificate. So if you don't want to download it now, or if you want to wait and download it later or share the link with someone else, we will be emailing that to you. All right, back to you, Nellie.
Thank you so much. So we are getting to the end of our webinar, and I want to really just kind of bring it all in for you guys and kind of do a true basically, brief summary of what we've talked about today. So we've talked about, client walks into the door and basically, they're wanting to hire employees, or they've added more employees in other states. And how is it for you to guide your clients? And this also is for yourself too, if you're adding other employees, but how do we remain in compliance with state and federal laws when we're hiring remote employees in our home state or in any other foreign state? And, what the different steps are, what the different requirements are to not only set up payroll, but also ensure that, in setting up payroll, you're also in compliance with those states' laws when it comes to the actual legal requirements for that corporation or LLC. So really, we've covered a couple of different buckets here. Is one is, payroll and how you set it up for any type of employee. Two is remote employees, and they're going to be working somewhere other than your home state. What is the process? What qualifies as doing business or nexus within those states? What doesn't qualify as doing business, where a company doesn't need to foreign qualify? And then if they do need to foreign qualify, what are the steps for foreign qualification within any state? And again, we have a plethora of resources to help you with all of this and more, in addition to actually setting up those payroll tax accounts. So to kind of give you an idea of the resources that we have here at CorpNet, first of all, let's talk about that example of when we were going over the foreign qualification steps of, company in California determines they're, doing business and what their activities constitute as doing business in the state of Nevada. And now it's determined they need to foreign qualify within the state of Nevada. Well, first thing they need to do is make sure that California corporation is in good standing, okay? And they're up to date with all their corporate compliance requirements and their taxes, and request to obtain a certificate of good standing from their home state. In our example being California, once California issues that certificate of good standing, then they can go and draft all of the foreign qualification documents that the state of Nevada requires in basically filing for foreign qualification within the state of Nevada. In doing that, they need to make sure that the name of that corporation or LLC that they're planning on using in the state of Nevada is available. So for example, one of our tools is we have a business name search tool that you can come and search unlimited names in any of the 50 states to see if that corporate name is available for use in those states. We also can take it a notch higher and see if that name is available in all 50 states by doing a free trademark search. Let's say you're not, for example, you or your clients are not really comfortable with what type of business structure they need to form. Okay. We also have an interactive business structure wizard, which can guide you and your clients in what type of entity they need to form. So let's say it's a new business. They're considering forming a corporation or an LLC in their home state, and they also have employees in other states, and they're coming to you for advice as to, well, should I form a corporation or an LLC? And you as an accountant or CPA or financial advisor are not comfortable with giving them this advice. Well, guess what? You can have our interactive business structure wizard tool up on your computer, on your screen, and it's basically an interactive wizard that asks a bunch of questions from your client, and it's been created by attorneys and accountants, CPAs, and it will provide an answer as to what is the best business structure that's going to provide them with maximum tax savings for their particular business and based on the answers that they've provided. We also have a CorpNet compliance portal with monitoring and proactive alerts that gives you business alerts on any entity that you're managing for your clients. Our compliance portal is free of charge. You can upload any amount of business entities into our portal free of charge. We will start monitoring it and providing you with compliance alerts as to when filing date deadlines, and we will monitor those business entities on behalf of you for your clients. This is also a great revenue opportunity for you to 10x your revenues by building a subscription model for your business. In trying to create subscription-based services for your firm based on recurring revenues. We also have annual meeting minutes, which if you or your clients are a corporation, you are required as a compliance step to draft annual meeting minutes every year and keep it as part of your compliance documents for your corporation. We also have a plethora of business guides and checklists. We offer payroll tax registration, where we can assist you and your clients with payroll tax accounts, payroll setup of those state tax accounts for both the SIT and the SUI in all of the 50 states, including local requirements as well within that state that requires also local payroll tax setups. And also we have our CorpNet blog. Now, for those of you who are wondering, well, wow, I would love to offer CorpNet's services to my clients. And, I either want to offer it to them as my own service, or I just want to have a trusted resource where I can refer people to. Guess what? You're in the right place, because our partner program here at CorpNet does exactly that. So you can partner with CorpNet and become a CorpNet white label reseller partner or referral partner, and basically offer all of our services, every one of our services to your clients. And there's a couple of different ways to do this. If you want to join, you can go to www.corpnet.com/partners, or basically set up a demo with one of our acquisition agents. But basically our partner program, I'll give you a little story. I designed our partner program probably about 7 to 8 years ago. And it was really because one year I was getting ready to send our Christmas cards to all of our clients. And I noticed that the majority of our clients are accountants and CPAs. And I thought, wow, what a wonderful opportunity for me to create a mechanism for our CPA and accountant professionals to be able to offer our services to their clients and enhance their advisory services, becoming a one-stop shop. And hence the CorpNet Partner Program was born. Basically, with our partner program, it's a pay-as-you-go service. There is no setup fees. There is no annual fees. There is no ongoing fees. It's literally a pay-as-you-go service, and it's designed to meet your needs. So if you're one of those, professionals that wants to have control over every aspect of your client's business, and you don't want your clients to know that CorpNet is doing the work for you, but you want to have a service that can do all the back end fulfillment work for you, all of this, become your silent fulfillment partner. Well, guess what? Our white label reseller partner program is just what you need. We provide our services to you at discounted wholesale prices, where you can resell at an upcharge to attract more clients and increase revenue. So you get discounted wholesale pricing. You can request everything to be privately white labeled with your logo on it, your branding on it. You set your own pricing. You get 24/7 personalized support, and you get a dedicated expert concierge at your fingertips every single day. Now, let's say you don't want to be the middleman and you want to be the person that just has a trusted resource to send your clients to. That's basically our referral program. And you get to refer to enhance your services. You get to refer your clients to a trusted resource, knowing that they're not going to be poached and they're going to come back right to you. You can earn a commission on each sale. If you don't want to get that commission, you can waive it and pass it on to your client as a discount. So again, check out our CorpNet white label program. Check out our CorpNet referral partner program. You can apply now at www.corpnet.com/partners. It has been an absolute pleasure presenting to you on this topic. It's actually one of my favorite topics. If you have any questions, feel free to reach out to us at info@corpnet.com. Again, my name is Nellie Akalp, founder and CEO of CorpNet. I look forward to seeing you again on CPA Practice Advisor with another webinar. Have a wonderful day.
Thanks so much, Nellie, and thank all of you so much for sharing your time with us today. I don't even have to ask because I know you got amazing information from this event. And also, as we mentioned before, the resources are on your screen available to download, including the PDF of this presentation. We will be emailing you the link to the 50-state Nexus Guide, along with information about your CPE certificate later today that will come to you from CPA Practice Advisor. We really want to thank CorpNet for making this event possible and for enabling us to offer a free CPE credit to each attendee. If you have any questions about CPE, you can contact me directly at gperry, Gperry, at cpapracticeadvisor.com. Also, if others are watching this event with you at the same computer and they require CPE credit, you can email me their names and email addresses, and we'll take care of getting certificates to them. Again, that's gperry at cpapracticeadvisor.com. After this event, you will be presented with a post-event survey evaluation form. We hope you'll take just a moment to share your feedback with us so we can continue to improve our webinar series. Thank you, everyone, and our audio will end now.